Barak Yahweh, Barak Yahweh Shah, Yahweh, Bahashim, Yahweh Shah, Bahashim, Krahak Radash. All praises, honor, and glory, love, respect, faith, and power, and trust, and all credit to my Heavenly Father, Yahweh, and my Heavenly Big Brother, Yahweh Shah. Thank you so much for what you've done, what you're doing, and what you're going to do. Double honors to your apostles and elders and bishops of GMS, Great Millstone, who I learned from, and all the men scattered all over the world, teaching this truth and nothing but the truth. In the name, spirit, and the power of Yahweh Bashim Abashah, trying to put a spiritual bug in your Hebrew Israelites' ears, you so-called blacks, Latinos, Hispanics, Native Americans, Seminole Indians, and your speckled birds. And what is a speckled bird? That be a Hebrew Israelite that look like some of the heathen nations, like, for example, a Hebrew Israelite that look like a so-called white person, or so-called Chinese person, etc., etc. Got some videos lined up related to everything financial, going to shit from China to the United States. Anyway, I'm gonna play these videos. I'm gonna say whatever I gotta say. Play these videos, get into the script, my best ability. Say whatever I gotta say through spirit and power. Yahweh Bashim Awashad, the Holy Spirit of Kurhak Dash Lord wanna be on me. Let's get it.
重磅好消息啊！咱们又限制炒美股了。
Big news. Now they're restricting U.S. stock trading again. Starting today, overseas brokers like Tiger and Futu can no longer let domestic investors buy or transfer in funds. You can only sell. This will push more money into our A-share market. Good for our market. Incredible.
This was actually a sarcastic remark from a Chinese investor. The China Securities Regulatory Commission, or CSRC, recently announced that 3 overseas Chinese brokerage firms, Tiger Brokers, Futu Securities, and Changjiang Securities, are operating illegally. They face asset confiscation and fines, with the amounts involved being significant. Tiger and Futu alone are facing combined penalties of 2.3 billion yuan. What is behind this crackdown, and what issues could it create? On May 22, the CSRC said that Tiger Brokers, New Zealand, Futu Securities International, and Changjiang Securities, Hong Kong, conducted securities promotion and trading in China without approval or the required licenses. The Commission said these actions violated Chinese securities, funds, and futures laws and regulations, disrupting market order. The CSRC plans to confiscate all illegal gains from these firms, both in China and overseas, and impose strict penalties. Tiger, Futu, and Changjiang are cross-border internet brokers serving mainland Chinese investors. They operate under Hong Kong or overseas licenses and use websites, apps, social media, and mainland partnerships to provide account opening, trading, and fund transfer services for Hong Kong and U.S. stocks. In recent years, they have attracted many middle-class investors and young retail traders from mainland China. Following the CSRC announcement, Tiger and Futu shares fell sharply in pre-market trading. Tiger's U.S. listed stock dropped 45% pre-market, while Futu Holdings fell more than 30%. U.S. economist David Huang told the Epoch Times that Beijing's crackdown on illegal cross-border financial services is officially framed as enforcing securities law and protecting investors. In reality, it targets brokers that help Chinese residents move funds to overseas stock markets, closing channels for unmonitored capital outflows. On the same day, May 22, the Hong Kong Securities and Futures Commission, or SFC, issued a circular requiring licensed brokers to strengthen measures against forged documents and money laundering, raise account opening standards, and apply 3 additional measures specifically for mainland investors' accounts. The SFC said it recently reviewed account opening procedures at 12 licensed brokers and identified major deficiencies, including inadequate due diligence on account documents and insufficient oversight of cross-border intermediary relationships with overseas agents. Huang noted that while the SFC frames its actions as compliance and anti-money laundering measures under international standards, they also align with mainland regulatory requirements. Media analyst Xi Shan on the program Good Morning China said the SFC's move supports Beijing's actions. This shows that Hong Kong's remaining status as an international financial center is continuing to erode. Public records show that these 3 overseas Chinese brokers are backed by emerging Chinese industry giants. Futu Securities is closely linked to Tencent. Its largest shareholder is founder Li Hua, Tencent's 18th employee, while Tencent itself is Futu's second-largest shareholder. Tiger Brokers is backed by Xiaomi and other brokers with Chinese heritage. Its largest shareholder is founder Wu Tianhua, with Xiaomi as the second-largest shareholder. Other investors include Tang Binson, China Growth Capital, and Zhen Fund. Changjiang Securities is a relatively new, social-focused broker with founders and management from Alibaba. Its major strategic shareholder is Yuanjing Capital, a venture firm founded by former Alibaba executive Wu Yongming. In fact, the CSRC already began cracking down on cross-border operations of Futu and Tiger on the 30th of December 2022. By May 2023...
Alright, anyway, there's a whole bunch of shit going on with these folks. Well, anyway, it's what it says on the title. China's financial martial law begins. That's the reason why I say the channel, I say this video just to play this video. See what the hell they talking about. But citizens banned from U.S. stocks, middle class money can't escape. So yeah, they having problems over there in the land of Moab. Let's see what's going on with the other parts of the world. Whatever this video is about, let's get to it.
Why waste another summer?
Get the fuck out of here.
Now, the economic fallout of the Iran war is beginning to ripple across developing economies. And according to an internal bank document reviewed by Reuters, 27 countries have moved to activate crisis financing instruments that would allow them to quickly access funds from existing World Bank programs. Now, the document does not disclose the names of all the countries or the amount of money being sought, but it highlights growing concerns over rising fuel prices, disrupted supply chains, and shortages of key commodities. The conflict has also affected global fertilizer shipments, raising fears of higher food production costs and inflation across vulnerable economies. Officials in Kenya and Iraq have already confirmed they are seeking rapid financial assistance from the World Bank. Kenya is dealing with the impact of higher fuel prices, while Iraq is facing a sharp drop in oil revenues linked to global market disruptions. The World Bank says 101 countries currently have access to some form of pre-arranged crisis financing, including 54 nations eligible under its rapid response option. And that mechanism allows countries to access up to 10% of undisbursed World Bank financing during emergencies. The World Bank President Ajay Banga has recently said the lender's crisis toolkit could unblock about $20 to $25 billion in immediate support, with the potential to scale up to nearly $100 billion over time. The International Monetary Fund had earlier estimated that up to a dozen countries could seek between $20 and $50 billion in near-term support. However, officials say many governments remain in a wait-and-see mode as uncertainty around the conflict continues. Analysts also note that several countries appear more willing to approach the World Bank instead of the IMF, largely because IMF lending programs are often tied to austerity measures. Economists warn that such conditions could intensify social and political tensions in already fragile economies.
I wanted to see what this video
Researchers
about.
in Germany.
Well, I want to see what that video about. I actually want to, it's brand new 3 minutes ago. I wanted to say that for something else. See this right here. But anyway, let's move on to some more videos related to finances and what's going on worldwide.
What is happening right now will affect all of us. We better pay attention to what's happening. Japan is cracking and is about to collapse, and it's going to take everything down with it. This is as big as it gets, guys. And I know what some of you are probably thinking, Japan, Japanese bonds, why should I care about that? I live in Florida, I live in Ohio, I live in Texas. I'm trying to pay for my mortgage, buy groceries right now, fill up my gas tank, maybe keep my retirement account from getting wiped out. I get it, but that is exactly why this matters, because Japan is not some faraway island economy that has nothing to do with your life. Japan is one of the load-bearing walls of the entire global financial system. And when a load-bearing wall suddenly starts cracking, the whole house starts shaking. So let me explain what's exactly happening here. So for decades, Japan has been running one of the biggest financial experiments in modern history. Massive government debt, artificially low interest rates, central bank intervention, yield curve control, money printing like our own Fed, and the Bank of Japan basically told the market, hey, don't worry, money will be cheap forever. Okay. But here's the problem. Money is never cheap forever. Eventually, reality shows up and smacks you in the head. It's like drinking alcohol every day and pretending you're not an alcoholic. People like that can only deny it for so long. And right now, reality is showing up in the Japanese bond market. Now, don't let your eyes glaze over. Let me explain what's happening here, because long-term Japanese bond yields have been surging. The 30-year Japanese government bond has been hitting record levels. The 10-year yield has been moving back toward levels Japan has not seen since the 1990s. This is not just a Japan story. This is where it really matters for the United States of America. 2 years ago, here on the show, I was warning about this, telling all of you that Japan is one of the largest foreign holders of U.S. treasuries. Japanese banks, pension funds, insurance companies, and institutions are deeply tied to U.S. bonds, into U.S. bonds, and European bonds, and the global market. So when Japan starts taking losses at home, what do? They sell what they can. They start dumping U.S. treasuries like a bad habit. That means U.S. treasuries get dumped. That means global equities. That means pressure on the very markets that are holding up your 401k, your pension, your mortgage rate, your credit card rate, your car loan. This is like the plumbing of the entire global economy right now, and the pipes are cracking. So take a look at this.
Pretty much the U.S. dollar is being devalued more. Yeah.
On your screen. Look at this chart. This is the U.S. 10-year Treasury yield going back decades, and every time yields spike, something breaks every single time. I mean, look at the 1987 stock market crash, the 1990 recession, the Mexican peso crisis, the Asian financial crisis, the tech bubble, the global financial crisis, the euro debt crisis, the taper tantrum, and the 2018 global sell-off. Over and over again, the bond market starts screaming before the stock market admits that there is a major problem. But here's what's different right now. For 40 years, we were in a bond bull market. Interest rates kept falling. Every crisis could be papered over with cheaper money. The Fed could just continue to cut rates. Governments could just borrow more money. Wall Street could refinance. Consumers could borrow more money. Corporations could roll over their debt. That was the system. But now that 40-year trend looks like it's over. Rates crashed to zero during COVID, and then they reversed back violently. Now we're back near 5% on the 10-year Treasury. The 30-year Treasury is hitting levels we haven't seen since before the last financial crisis. This is not a normal market cycle. This is, in my mind, the end of an era. And look at household wealth. Look at the second chart here. On paper, Americans have never looked richer. Real estate values exploded. Stocks exploded. Retirement accounts exploded. Housing exploded. Mutual funds, corporate equities have gone up almost vertical since 2020. But here's the uncomfortable truth. A lot of this is just paper wealth. It looks great on a spreadsheet. It looks great on Zillow. Hey, look at my property value. It looks great inside of your brokerage account when the S&P is near record highs, but can you actually use it? I always say you can't eat equity. You can't feed your family with equity. Your house may be worth more, but if you sell it, where are you going to go? Your mortgage rate might be 3% right now, but the new mortgage is 7%. So your 401k might look healthy, but it might be riding on a handful of mega cap tech stocks right now. Your home equity might look huge, but tapping it means borrowing at much higher rates. So Americans right now are paper wealthy, but cash poor. And that is the trap. The rich own assets, the middle class owns liabilities dressed up as assets, and the poor are just getting crushed by rent, food, insurance, debt, energy costs. I was talking to our neighbors yesterday, and she couldn't believe she filled up her truck. Said it cost her $111, and she just stood there and laughed out loud. And the woman next to her laughed too. She's like, I know, all I can do right now is just laugh. I didn't know what else to do. I have no choice. So that's how this wealth
Gas prices are peanuts. Trump says gas prices are peanuts only if you're rich. Yeah. Fucking nigger.
right now is just laugh. I didn't know what else to do. I have no choice. So that's how this wealth transfer happens right now. Not all at once, slowly, quietly, and then suddenly. Now look at this consumer discretionary number, because this chart may be the scariest one of all. This shows U.S. consumer discretionary stocks equal weighted versus the S&P 500. In plain English, this is showing us how the average consumer-facing company is performing compared with the broader market, and it is collapsing. Guys, I don't want to sugarcoat this. We are back near the great financial crisis levels. This means the businesses that depend on regular Americans having extra money, restaurants, retailers, travel, leisure, home, apparel, home goods, are already telling you that the consumer is tapped out. Costco 2 weeks ago said their customers aren't buying red meat, and every time their customers pull back on buying more expensive red.
Well, don't worry. Hell, most of them customers probably gonna get bit by a tick. That's what they prime. I couldn't help myself saying that. Anyway, yeah, because they got those ticks where they people get bitten by. If they like puke inside your body and it get you sick with some kind of disease, and then your ass can't eat red meat, you be allergic to it. But anyway,
red meat, the economy was facing collapse. Well, you wouldn't know that by looking at the headlines, the S&P 500, because a tiny group of massive technology companies is like masking the pain that's underneath it. That's that K-shaped economy that we hear so much about. The top keeps floating higher while the bottom gets crushed. Wall Street celebrates and Main Street is bleeding. Credit card debt is at an all-time high. Buy now, pay later services are exploding. Car payments are outrageous. Insurance costs are through the roof. Grocery prices are still painful. People just borrowing money just to survive right now. And yet the media keeps telling you the economy is strong. Strong for whom? Nvidia, AMD, and top chip manufacturers? Maybe for them it's strong, because the average American is not experiencing strength, they're experiencing exhaustion. And that's why Japan matters, because
yeah, let me get to a scripture. Now these days, hard times, man. That's why we seek Yahweh Shema Shah to get us through these times. Strengthen up our minds and spirit. Hagar chapter 1 verse 6, ye have sown much and bring in little. Ye have sown much and bring in little. Ye eat, but ye have not enough. Ye drink, but ye are not filled with drink. Ye clothe you, but there is none warm. And he that earneth wages to put into a bag with holes. So you work so much for very little, you ain't got enough for food, water, clothing, and you ain't got enough to save. And there's really no such thing as saving anymore. Nope. Either you get it. You get the money, get your check, and you put the check into whatever you can that you can afford and survive with. But anyway,
Japan may be the fuse. The bond market may be the match. But the explosion, if it comes, it lands right here at home. So where does this money go? What happens next? Well, this is the beginning of the greatest wealth transfer in a generation. Money is moving out of paper promises and into real things right now. Energy, copper, silver, uranium, critical minerals, food, productive land, infrastructure, warehouses, defense, manufacturing, anything real, anything that's tied to the real world. The old system was built on cheap money, cheap imports, cheap labor, cheap energy, endless debt. And that system is breaking. This new system is about reindustrialization, reshoring of businesses, rearmament.
No, it's more about going digital, going fully digital, getting rid of all the physical currency and bringing in a digital currency. And the only way you're gonna live and live and work with this digital currency, you gotta have to get the chip implant, the mark of the beast. Anyway, and he ain't speaking about that.
Massive $1 trillion defense budget, supply chains, power grids, all of it, data centers, rockets, satellites, nuclear energy, mining, manufacturing.
Yeah, they're talking about all this physical stuff that now, like land that a lot of people don't have, they're gonna end up losing. Gold, silver, all this other shit that people don't most have and they're gonna get ready to lose. The only people that have all this stuff is the wealthy, wicked elite. And they're taking everything from you damn people. And I say, cool, I don't give a fuck. Because hell, once they take it, they going to lose it too. Especially when the Lord returns.
Refining, all of it. This is why commodities matter so much, because you cannot build the future with fake financial engineering. You need actual things. You need copper, you need silver, you need uranium, you need oil.
And they don't tell you that and tell the people that. Nah, they know about it, the elite know about it, but when it comes to you people, all they tell you is get your money, get that bullshit currency built up or whatever. Anyway,
you need gas and you need steel, and then of course on top of
resources for many years, decades, centuries. These niggas weren't fighting over money; they're fighting over resources, cause that's energy. They use these resources for certain things. Shit, what are you using? Fucking piece of paper that's printed with some green ink or whatever the fuck you call it. What is that used for? Just for buying. You can use silver and gold to buy things and use it for medical use and technology, and there's just many varieties of things you can use certain metals for. Anyway,
that you need electricity, and the people who understand this early will be in a very different position from the people who just keep pretending that this is another normal cycle right now.
All right, I'm done with this video. Let's get to the next one. Let's see what this one talking about.
Welcome back, everyone. Thank you so much for being here, and thank you to those of you who have become new subscribers on my Patreon and Substack. After my previous announcement last week, it was really great to see so many of you join those platforms. Unfortunately, as I mentioned before, YouTube started just unsubscribing you from my YouTube channel. Sometimes I see as many as 100 to 200 subscribers just gone in 24 hours, and that's very, very unusual. And of course, I take it as a sign that something far worse might be in store for the channel.
Yeah, I mean, a lot of channels, especially these true.
So if
you're gonna be cracking down on information being spread, famine of the word.
If you haven't already,
that's all I can think of right now. That's why I'm bringing it up.
Please do take a second to become a free, or if you can afford, paid follower on Substack and Patreon. I always appreciate your support, and we should do that in case something does happen and the YouTube channel is purged. All right, one of the biggest bubbles in the US economy right now is, of course, the private equity bubble. It is worth an estimated $22 trillion, and nobody's even talking about it. Well, private equity was once presented as the smartest and most dynamic form of capitalism. The idea behind it was very simple, lucrative, and therefore highly appealing. Talented investors would buy private companies, improve operations, grow revenues, cut inefficiencies, and eventually sell those businesses for massive, truly massive profits. Well, unlike public corporations that are trapped by quarterly and annual earnings pressures and a ton of reporting requirements and a lot of bureaucracy, private companies were supposed to be more agile and innovative. And they were for a while. But since most economic activity takes place in private businesses rather than public markets, investors believed that private equity offered access to the true engine of economic growth. While that narrative transformed private equity from a niche investment strategy into a multi-trillion-dollar global industry. But let's face it, it's safe to say that the very success of private equity created the conditions for its imminent decline, which we're about to discuss next. As the industry grew larger, firms became increasingly focused on accumulating assets under management rather than generating exceptional investment returns. The incentive structure shifted toward collecting management fees on truly enormous pools of capital. Today, for example, private equity firms collectively sit on more than $2 trillion in uninvested capital, which creates enormous pressure to complete deals at almost any price under any circumstances, and that's really never a good sign. As a result of that, valuations became increasingly detached from economic reality, from accounting and finance reality. Why would that be? Well, it is due to the fact that firms are relying heavily on optimistic growth projections, on leverage, and of course financial engineering rather than genuine business improvement. Now, at this point, you would ask me, well, if that's the case, if what you're telling us is true, then why did the framework work for so long? And how did it generate billions and billions in profits? Well, that is an excellent question to ask. The system actually worked because interest rates remained near historic lows. Cheap debt allowed private equity firms to borrow aggressively, to refinance easily, and to inflate valuations across industry. But if you follow my work, you already know that the macroeconomic environment has changed dramatically. Higher interest rates, tighter credit conditions, and slowing growth have exposed the fragility of many private equity-backed companies. The industry is now holding tens of thousands of unsold businesses worth trillions of dollars on paper, yet many of those valuations may never be realized in the real market. Now, what is a good word to describe the situation? I would argue that the best word to describe it is a bubble. The private equity industry is in a multi-trillion-dollar bubble that is about to burst. The private equity central promise, superior returns, as I mentioned previously, has started to collapse. Investors accepted higher fees, they've accepted illiquidity and a lack of transparency because they truly believed that private equity would significantly outperform public markets. Well, interestingly enough, that outperformance no longer exists. In recent years, major stock indices, such as the S&P 500, for example, have often delivered higher returns than many private equity funds, despite being cheaper, more liquid, and fully transparent. And that has forced many investors into an uncomfortable question. The question is, why would you lock money away for decades in opaque, high-fee structures if simple index funds can actually perform better? You can't do that. It just doesn't make any sense. Well, the industry's lack of transparency has also intensified concerns. Unlike public markets where prices are continuously determined through open trading, private equity firms often value their own portfolios internally, and that is a major red flag. As a former Big Four auditor, I can tell you that management valuations and forecasts and assumptions upon which valuations are typically based should never be trusted without being scrutinized, challenged, and double and triple checked. This lack of oversight and transparency actually creates significant room for inflated or overly optimistic valuations. Investors are now increasingly questioning whether many private equity assets are actually worth what firms claim they are worth on paper, on their balance sheets. Now, at the same time, broader market conditions have become increasingly uncomfortable to private equity too. Strong public market performance has made traditional equities more attractive and safer, while economic uncertainty and inflation have pushed many investors towards safer assets such as gold, silver, and commodities in general. Even the shares of major alternative asset managers like Blackstone and Apollo Global Management and others have actually declined as investors question the sustainability of the industry's business model. The most likely future for private equity might not be a total collapse, at least not yet, but I would argue that that future looks like a long-term stagnation. And arguably, there isn't that much of a difference between the two. The industry may continue operating, but with weaker fundraising, with weaker returns, and arguably with a growing skepticism from investors. So that aura of private equity as a superior form of capitalism is fading rapidly. What once appeared to be a model of innovation, as I mentioned before, increasingly looks like an over-financialized system that is overly dependent on cheap debt, inflated valuations, and financial engineering. Ironically, private equity may only survive by becoming smaller and actually returning to its original principles. And that looks like a more disciplined industry that is focused on genuine operational improvement rather than endless scale and leverage. And in the end, it would have to prove that it can create real value. But the era of this easy money, explosive growth, and unquestioned faith in private equity appears to be ending. It is gone. The question now is not whether cracks exist in that $22 trillion industry, but the real question is how much longer investors will continue ignoring those cracks. Let me know in the comments if you would like to see more of this topic covered in my work.
US bond markets are flashing fresh warning signs as long-term treasury yields climb to their highest levels since the global financial crisis. While rising oil prices and sticky inflation have added pressure on markets, analysts at Bank of America say that growing concerns over America's worsening fiscal health are now becoming a major trigger behind the sell-off. Here's a detailed report.
The US bond market is witnessing a sharp sell-off. Long-term treasury yields have climbed to their highest levels since the 2008 financial crisis. According to Bank of America, investors are increasingly worried not just about inflation and high oil prices, but also about the deteriorating fiscal health of the United States. The benchmark 30-year treasury yield touched 5.18% this week, the highest level since 2007. And this comes as markets reacted to strong consumer spending, resilient labor data, and ongoing geopolitical tensions linked to the Iran conflict.
And the longer that oil prices stay up, the longer we're going to have rising inflation. And this is the first time we've really seen the 10-year inflation expectations cross 2.5%. And historically, that's been very consistent with a period where the Fed has had to increase interest rates. So you're really seeing a sell-off in small caps, consumer discretionary, anything that's more risk-oriented, and you're seeing a rotation into companies that have better balance sheets.
Bank of America says the return of so-called bond vigilantes is becoming evident. And these are investors who sell government bonds in protest against rising deficits and excessive borrowing. Analysts say the recent steep rise in long-term yields suggests markets are demanding higher compensation to hold US debt. Typically, stronger inflation and economic growth would push up short-term yields as markets price in more Federal Reserve rate hikes. But this time, the yield curve has steepened, with long-term bond yields rising faster than short-term rates. According to Bank of America, that signals fiscal concerns are now overtaking monetary policy as the key driver of the bond market sell-off. The US government is expected to issue more debt than previously projected as weaker cash flows and larger tax refunds widen the deficit. At the same time, higher yields are increasing the government's borrowing costs. The Committee for a Responsible Federal Budget estimates that if current rates remain elevated, US debt could rise by an additional $2 trillion over the next decade. Interest payments alone are projected to climb from $970 billion in 2025 to $2.5 trillion by 2036, consuming nearly 30% of federal revenues. Recent Treasury auctions are also signaling weakening investor appetite for long-term US debt. Analysts say investors are increasingly cautious about locking money into long-duration bonds. Bank of America also warned that the Federal Reserve could face mounting political pressure if inflation remains elevated and further rate hikes become necessary. While markets still believe the Fed remains focused on price stability, analysts say tighter monetary policy could worsen America's fiscal position by sharply increasing debt servicing costs. Treasury Secretary Scott Bessent has argued that the current oil-driven inflation shock will eventually fade as global energy supply rises. But bond investors remain unconvinced for now. Business Bureau, Beyond World is One.
Habakkuk chapter 2 verse 6, shall not all these take up a parable against him, or and a taunting proverb against him, and say, woe to him that increaseth which is not his, how long? And to him that lendeth himself with thick clay, that debt and money, the U.S. currency, the dollar is debt. So anyway, this bitch about to crash, and I don't give a shit. But you know what's going to lead to, the chip implant, pretty much. But let me go ahead and read this. Zechariah chapter 1 verse 10. And it shall come to pass in the day, said the Lord Yahweh, that there shall be a noise of a cry from the fish gate, and a howling from the second, and a great crash from the hills. So it's coming, and I don't give a shit. But it's gonna bring that chip implant though. So you want to be ready for it spiritually, mentally. And how do you do that? By getting right with Yahweh Shema Shah to your best ability. And repent. Next video.
The smell of a Memorial Day barbecue is always a hit. But for many, the cost this year is not.
Explain to me how $300 worth of groceries gets you basically nothing now.
A new report analyzing the prices of some popular food brands found the total for a classic barbecue has increased by nearly 10%, almost triple last year's jump. Beef hot dogs are up more than 18%. Fresh ground beef has spiked nearly 15%. And barbecue sauce will cost you almost 12% more. All that has helped send consumer sentiment to a new record low in May.
The consumer is very nervous and really watching every penny, and the worst is yet to come.
Phil Lempert of SupermarketGuru.com says the main reason is the war in Iran.
Number one is the price of diesel, because all of our food, whether it's imported or whether it's domestic, travels by truck to our supermarket. Then we've got the fertilizer problem. Those prices are up. So if you're going to have that barbecue and you want corn on the cob, you're going to pay twice as much for it.
For shoppers needing to stretch each dollar, Lempert suggests swapping name brands for store brands, buying frozen instead of fresh, and always have a game plan.
Have that shopping list when you go into the store. Make sure that you're really thinking about what you're going to be serving at that barbecue and portion it out.
While overall retail spending remains healthy, that's really driven by higher gas prices. And as for what you can expect to pay for your groceries this summer, unfortunately, as long as the Strait of Hormuz is shut, those prices are expected to continue to go up. Tony.
All right, Joe Ling, thank you very much. It's a Barbie camper of sorts.
This guy again, Jake. He just. Oh, so I see what's going on. It's a bunch of videos put together as one about Americans struggling for high prices on everything. Bro, just cruising though. And he riding dirty because this shit ain't legal. But anyway.
Designed by the guy.
Hey, you know what? Somebody gonna say this shit is folly. And I was watching another brother video tomorrow. Well, somebody left a comment saying Jake he's on some folly shit. Like, shut up, nigga. This nigga trying to save some money, man. Jake trying to save some damn money. Yeah, shit.
Driving it there.
And Jake always trying to figure some way to save a buck, man. Heck yeah, look what he got.
Their 30-year-old Molly.
Yeah, he can definitely. This is a penny dropper right here. The penny dropping Mobile.
Hightower, a handyman not far from Atlanta. He says he started with a go-kart base and the engine from an old power washer, and what he got is maybe the ultimate answer.
So got roll bars, and even got the little cushions put on the roll bar, so he won't bump his head on the roll bar.
To higher gas prices.
Gas is getting too high, so I gotta do what I can. I can't do my regular cars. I gotta do my little mini cars. So if I can get $1 on pump 6.
Yes, $1. That little mini car, as he calls it, costs all of $3 to fill up entirely, compared to about $60 for his real.
And then when is he pumping? That's it. Only like 3 seconds. That shit is done. He can probably go get 20 miles off that shit.
Car, a minivan. And while he can't pick up the kids in the mini car, he did install a rack for groceries, and as long as he stays off the highway, he says the local cops have been understanding. Oh, and yes, he says this is for real.
Gas has always been an issue. It go up, it goes down, things like that. But this time is when I'm actually starting to feel it.
And there it is. Maybe not.
That's his grocery getter.
The Barbie Dreammobile, but at $3 a tank, pretty close to a dream.
Dude made national news of that shit.
Filling up in Killeen, Texas, on average, gas is $1.28 a gallon more than it was a year ago. For Charles Rice, that's about $90 extra a month to fill up his truck.
$3.96 instead of $4.12 or $4.20, so that's what brought me in here today.
Here is Casey's General Stores.
I ain't playing no more. There's enough without talking about gas prices. I don't want to hear no more about high gas prices. I'm getting tired of fucking driving right now. Let's get to the next one.
People are saying they don't enjoy grocery shopping anymore because whenever they go, they feel like they're able to afford less and less for their family. They're feeling like they're doing something wrong when in reality, their wages are just not keeping up with the cost of groceries anymore. With the gas prices going up, global conflicts affecting the prices, people are just changing their diets, they're fasting more, they're foregoing meals altogether just because they're saying they can't afford the rising cost of these groceries.
What has the world come to? That this and this cost me $9.57.
I swear, did I play this video before? Well, I forgot to delete it. Well, shit, I'm playing it anyway.
So like $10.
Let it keep on playing. I've seen this shit before. I don't know exactly where, when did I play this video?
For that.
This is what $10 worth of groceries looks like.
Oh yeah. I remember. I was playing this video, and then I was like, when this video got to this part with this woman talking about this is what $10 got her. I was playing one video from what's that prepper chick, Prepper Princess, and she showing off what she got for $10, but it wasn't exactly 10. It was like $10.30 something. But I was like, man, this woman here was catching. I don't know where she bought the shit, but they probably had little bargain sales deals, and a lot of shit she got was basically free. So then not everybody got that type of, anyway, people ain't got it like that. Shit, they can get it like that. Hey man, that'd be awesome if you can get it like that. She said $10. She can get 2 weeks worth of food for $10. 2 weeks worth of food for $10. I'm like, nigga, get the fuck out of here, bitch. With that shit. That shit. She shouldn't even did a video like that. It's like kind of sort of like she's an insult to everybody else who can't get it. Anyway.
That's it.
Yeah, that's it. You know, the cotton candy grade, them motherfuckers expensive. Shit, I was like, hell no.
Grapes.
Yeah, that's like $3 a pound, maybe $4 a pound. And it's at Kroger's. Man, Kroger's ain't shit.
We're half off. I don't know what the world's coming to.
Man, it's going to shit.
I just want to cry right now. I stopped after work to BJ's, right? Just to get the essentials, milk, eggs, bread, stuff like that. Stuff for lunch, for work. Some snacks. This bill was almost $300.
Again, I'm at Publix right now, and I was looking at chicken breast, organic chicken breast. It's not even air chilled, okay? So it's soaked in bleach. And look at that's 2 chicken breasts. It's $20. How's it gonna look in a couple of months? I'm kind of scared. Are you guys noticing prices going up in your grocery store too?
I just got done grocery shopping at Walmart. Walmart is supposed to be a relatively cheap place to get your groceries from, which is why I shop there pretty often. Do you guys know how expensive hamburger meat is now? It is literally almost $8 for 1 pound, and it doesn't matter what kind of hamburger you're getting. It doesn't matter if it's the 75-25, the 85-15 lean. Like, it doesn't matter what kind you get. It's all almost $8, which is insane because my mom used to tell me when I first moved out of the house and was purchasing things on my own, she was like, just always have hamburger because hamburger is so inexpensive. You can pick it up, you can make so much with it. $8 is actually crazy. Like, that adds up so freaking fast. My groceries weren't that expensive. Like, I was adding them up. I'm like, okay, this is fine, this is fine, this is fine. I added my hamburger and my price skyrocketed. That's freaking crazy. What are we doing? What is this economy that we are all living in right now?
Oh man, this shit leads to that chip implant ultimately. So don't be surprised about the prices being up so damn high. Just get what you can get and don't make a fucking video about it and not complain about it. Just pray Yahweh Shema Shah get you through this time and let these people have all the complaints about the prices going up. I be complaining. If I'm gonna complain about something, complain about how wicked this world is and praying that you don't fall into the, you know, get weak again by Satan or you being weak by yourself, and you know what I'm saying? And you just pray the Lord have mercy on you. It's gonna get crazy out here, man. Grocery prices are crazy. Well, shit, people gonna go crazy. Shit, especially when they ain't got no food, lack of bread. It's gonna be famine, pestilence, earthquakes in diverse places, and cannibalism because of famine, and World War III. Chip implants gonna be implemented. Man, it's gonna be crazy.
It makes me so mad.
You know what, let me go and get a scripture. 2 Ezra chapter 16 verse 21. Behold, victuals shall be good and cheap. Yeah, it's gonna be at that point. Right now it ain't cheap, but when that chip implant comes around, I'm just thinking of a scenario. When the chip implant comes around, prices probably gonna drop down and things gonna look good. Saying victuals shall be good and cheap upon earth. That they should think themselves to be in good case, especially good case when they get the chip implant, thinking everything is good. But then, even then, shall evils grow, sore famine and great confusion. If it's not the chip implant, no, that's the wrong scenario. Let's just say shit. Its food is still affordable. It may be high as hell, but it's still affordable. But wait, evil's still growing, sore famine and great confusion. Soon that price is gonna be going skyrocket through the roof. Yeah, what I just said about the chip implant, that's not a good scenario. But more like if the prices is not cheap, but they you can still buy shit. You just can't buy as much as you used to, and you can only buy a certain amount on a certain day. It's like something you used to buy every day, now it's every week. Now, well, actually, now it's turning to every month. Once a month, you can buy this item. Yeah, it's getting that bad, bro. Better seek the Lord as an Israelite.
No one can afford to live. The hamburger is so expensive, and that is supposed to be one of the most easily accessible meats.
Chicken usually supposed to be.
And we ask ourselves why America has the highest obesity rate and why we can't afford to eat healthy and we all have to eat fast food all the time. Are you freaking kidding me? 2, 4, 6, 8, 10, 12, 13. 13 strawberries for $12? $12 for strawberries. And yes, you can go out of your way. You can go to a farmer's market. You can get your food at Trader Joe's. You can go to 8 grocery stores so that you can be frugal. But then at the same time, gas is $5 a gallon. So just stay home. Oh my God. And don't even get me started on the actual quality of the food, the chemicals in it, the hormones in it. Literally poison. And we pay for it.
I have a legitimate question.
Let me skip some of this because I've seen this before. If you want to watch, if you want to watch this video in your own time, they go to title, they go to channel. I just want to skip some more stuff because I stopped somewhere around, I don't know where.
To the new generation of web.
You know what? Fuck it. I don't even want to play this video anymore. Let's get to this last one. See what this was about.
The American youth is facing a new stress. Dating in America is becoming significantly expensive. The shadow of war in West Asia is silently pushing up the prices, and it is hurting not just pockets, but also hearts. According to BMO 2026 Real Financial Progress Index, the average all-in cost of a date has climbed to $189 this year, up 12.5% from last year. The estimate includes transportation, grooming expenses, and the actual cost of dining, drinks, or entertainment.
Man, fuck that shit, man. You can't do it, but I'd be like, hey, make it a blockbuster night. Nah, that's the first. Yeah, you know. You can always go on don't fuck a date, man. Anyway.
Millennials reported the highest spending at $252.
Baby boomers spend $126
per date, followed by Gen Z at $205 per date. The rise in dating expenses has far outpaced the broader U.S. inflation rate, highlighting how higher living costs are increasingly affecting personal relationships and social behavior. The rising cost of dating is now changing how Americans approach relationships. BMO's survey found that nearly half of singles are going on fewer dates or choosing lower cost activities. The average number of dates per person also declined from around 14 last year to 12 this year. Many singles are shifting towards budget-friendly options such as
home-cooked meals. Yep. Shit.
A coffee meetup, outdoor activities, picnics, or even home-cooked meals instead of expensive dinners and events. Experts say higher living costs are lowering people's willingness to spend on uncertain first meetings. While some are also moving away from dating apps to meet people organically, the financial pressure is also reshaping.
Organically? And shit, what do you get in return for that? I mean, not return. What is organically, face to face? People will have their face on a fucking phone. They rather have their face on a goddamn phone, or that shit. You can't talk to these people for nothing. They can barely fucking speak English or read. So what make, and they can't hold a conversation for shit. If they do talk to you, or y'all get to talking, hell, what they gonna talk about? Some dumb nigga shit, some drama shit, entertaining shit. I'm like, I don't even know what's out there right now that's entertaining. I don't even look to be entertained. I just be like, man, I just want to be edified. Yeah, there's some entertainment you get into, but whatever. Anyway, I don't even know what the fuck to say. I'm tired of this fucking world. It's just so much shit that I just like, ugh. Anyway. Things are good. It's just the Lord is fucking this place up, bro. It's no longer, this shit is fucking dead. Soon these people ain't gonna be worried about dating this shit. Dating is another word saying fucking anyway. But nobody ain't gonna be studying this shit. They gonna be damn fighting for their lives soon to come. When all hell break loose, Jacob Trouble, go full throttle 9,000 RPMs to the engine blow up.
Expectations around who pays on dates. Around 71% of men surveyed say they expect to pay for everything.
Shit. These bitches dreaming.
During the early stages of dating, while over half of women say they prefer splitting expenses.
Dreaming. You talking about splitting, going 50-50, nigga, please. That ain't even gonna work. How about, I mean, that ain't gonna work, because pretty much she gonna bullshit you and want you to pay more.
Experts also
ain't never gonna be no 50-50.
Into social media algorithms for amplifying extreme views around dating.
Yo, it'd be better off you just buy. I mean, let's say, I don't know, I'm just thinking of some shit where, well, no, this is just dating. But I was saying, if you actually if you was in a relationship with this chick, and she talking about, and then y'all living underneath the same roof and talking about 50-50, I'm like, nah, you be better off now. You be better off living by yourself. Both of y'all got your own spot, and y'all take care of your own shit. Because I can't do that shit with that 50-50 crap. Because what if she's making more money than me? She need to take out a certain percentage, but she going to hold back and tell you how much she making. I don't know. Anyway, because that's really 50-50. You don't go paying the same amount when she need to pay more because of her percentage, or she making more money. Anyway, that makes sense. It should make sense that way. It should work out that way. But anyway,
and money.
It says inflation killing date nights.
Creating growing divisions over financial expectations.
No, the Lord is killing the date nights. Shit. Ain't gonna be at the time like fuck that dating shit soon. I might well say it. Isaiah chapter 4:1 gonna be kicking in soon. I don't know for every man. Well, men of the Lord, but I don't know, not every man, but men of the Lord. I don't know about all men of the Lord. Shit, man of the Lord, somebody as a man of the Lord might still be by himself. That most likely me. I feel like that's gonna be me by myself. I'm gonna be by myself. I don't even know if I'm a man of the Lord. Anyway, I'm just rambling. Am I done with this video? Yes, I'm done with this. This is the last video. Anyway, let me close it out with this. Yeah, man. They even going out, having a good time with somebody else is too expensive. People ain't bothered doing that shit no more. If that person cool, you can make that shit a blockbuster night. And catch a movie, get some popcorn, some organic, some not organic, well organic, but some real popcorn, not the one you bought in the microwave shit. I don't even have no popcorn maker. Actually, I do have a popcorn maker. I ain't never used that shit yet. It's an old fashioned, the pan, and you put popcorn in, and the oils in, and I never used it. Haven't used it yet. But anyway, Ecclesiastes chapter 12 verse 3, in the day when the keepers of the house shall tremble, be the bankers and the people that keeping the stock markets, people that keeping the financial system up and running now. They're not letting it run, they're letting it crumble, tremble, die, and the Lord gonna kill it. And the strong men shall bow themselves, and the grinder cease, because there are few. That's going back to the jobs. People, it ain't that many people working. And they talking about now AI costs more money for customers than AI causing companies more money than actually having workers. Yeah. Ain't that stupid? But that's man. That's Esau. This dumb nigga. He don't know what the fuck he doing. He causing him more money when he operating with AI. Dumbass. And especially the rest of these stupid not humans, heathens. But they are human. They are stupid. And those that look out the windows be dark and be the future of America and the rest of this world, they thinking they're going to bring in a new world order. It's failing. But what am I saying? The future of America is failing. The rest of this world, the windows of America and the rest of the world are going to be darkened for a lot of you people. Because y'all say that the rest of the world because I'm playing videos related to other stuff that's going on around the world. So pretty much this whole world is entering into a dark age, or a dark some dark shit, some evil sinister shit that's about to go down, and you want to be prayed up with the Lord. Yep, and I'm talking about you Israelites, because we scattered all over the world. And the doors shall be shut in the streets, the big business, small business be closed up. When the sound of the grinding is low, be the sound of work brought down low. And he shall rise up at the voice of the bird by the alarm clock, and all the daughters of music shall be brought low. So music suck like everything else does, and that's all I can say, man. This place sucks. Seek the Lord by seeking His prophets, and take heed to what it say, and try to build a spiritual mental relationship with Yahweh Shema Shah by praying Yahweh Shema Shah, praising Yahweh Shema Shah, worship Yahweh Shema Shah, fearing Yahweh Shema Shah, repenting to Yahweh Shema Shah. To all the men out there pushing this truth and nothing but the truth in the name, spirit, and the power of Yahweh Shema Shah. Keep on preaching, keep on teaching, keep your faith and trust strong in Yahweh Shema Shah, stay humble. And for you few sisters out there taking heed, keep your faith and trust strong in Yahweh Shema Shah, stay humble, stay in order with your man. If you ain't got no man, stay in order Yahweh Shema Shah. Peace and bless to the hopeful elect, and all praises to Yahweh Bahashem, Yahweh Shah. Shalom.